The auction template is designed to consolidate all the properties you may have an interest on bidding on onto one sheet for easy reference. I'll go through an example for you, so follow along so you can become familiar with the process. It begins with the APN, or Property Identification Code, which identifies and is unique to each property. Then we have the opening or minimum bid. This will usually consist of the amount of back taxes owed, any interest or penalties, the cost of preparing the documentation, their advertising, excise taxes, and recording fees. Now, these fees may not all be added onto the opening bid, but some of them may be added onto the winning bid after the auction has taken place. So make sure that you're aware of how the county deals with these fees so that you're not blindsided and surprised by fees you had not counted on. We'll also want to see the address and city that the property is located in to verify that we're in the right place. We don't want to be bidding on the wrong property. Also, we want to have the size of the house and the property by the number of bedrooms, bath. You may want to put in square footage of the house and year it was built. Next is the assessed value of the property. This is the value the county puts on the property for tax purposes. Some of them may value it at 100% of fair market value, some may do 80 or some 50. Make sure that you know what percentage of fair market value the county uses to assess their property. Now, this information can be obtained usually from the county assessor's website or by calling them directly. And some counties will provide this information along with their list of properties in the auction in their bidder packet. So for the purpose of our liquidating this property, we have compiled the comps of what similar properties in the area have sold for. In the example I showed you earlier, our comps came in at a range of between $465,000 and $496,000 on the property that we were interested in. So for our purposes, I will use the lower figure. Did you determine if the market is rising or declining in the area? Many counties now also post their past sales on their websites, thereby making your research so much easier. So based on the estimates of the value of these properties, we need to make a decision about what we would be willing to pay for it. Now remember, if the auction is done on a premium basis, meaning that the lien or property goes to the highest bidder, the final bid may be significantly higher than the minimum or opening bid. So I recommend that you set a maximum limit to bid in the range that you are comfortable with as a percentage of the current fair market value. Now whether your limit is 20, 50, 60 or higher, once you set it, do not go over this limit. Simply just walk away. Now I'll say that again very slowly. Simply walk away. There will be other opportunities, never fear. So when in doubt, I always follow the advice of Warren Buffett. And Warren says that there's only 2 rules to investing. He says rule number 1 is to never lose money, and rule number 2 is to see rule number 1. All right. So again, I want to make sure that you factor any closing costs into your maximum bid formula. And to kind of give you a guideline, when a contractor builds a house, they usually work on a 20% profit margin. They also figure in the liquidation cost between 6 and 10%. So what this means to you is that if you're going to make a profit, you need to acquire the property at 70% or less of the fair market value. So I will use 65% of our lower comp number of $465,000, which will put our maximum bid around $300,000. And by using that figure of $465,000 as a sales price, and then discounting it by 10% for a quick sale, that would mean that we would set an asking price of around $420,000. Now we need to factor in the cost to liquidate the property. Again, I'll use that 10% figure. Now this includes commissions if you're using a realtor, quieting the title, recording fees, etc. That will put the price that we can pay at around $378,000 to break even. So that is where my maximum bid of $300,000 came from. In most cases, what I'm really looking to purchase the property for is less than 50% of the fair market value. But working with this type of dollar figure, I can increase that percentage as you've seen and still realize a significant profit. And finally is the estimate of what that potential profit will be from the sale. When you show a potential investor that the profit on this deal is around 25%, what research you have done and how you came to this conclusion, do you think that would perk their interest? Do you think that your doctor, dentist, or accountant might have an interest? Well, maybe your rich Uncle Phil would. What percentage of that profit would you give them to partner with you? Hey, you may not even have to give them a percentage. They may only want a better interest rate on their investment than they're currently getting. So that's the concept that I use and the worksheet to keep track for myself. Hope that you're able to make use of this worksheet and the concepts behind their use. So here's to your profits.